IREN Ltd is currently trading at $51.28 during the Tuesday, April 28, 2026 intraday session, marking a solid climb of 1.26% from the previous close. While most investors are fixated on the flashing green numbers and the broad market momentum, there is a much deeper story playing out in the order books that many are completely missing. The expectation for IREN has long been that it would live and die by the price of Bitcoin, essentially acting as a high beta proxy for the crypto market. However, the reality of the current price action suggests a decoupling is finally taking root. We are seeing institutional blocks moving into the stock, not because of a crypto rally, but because of a massive infrastructure pivot that has transformed this company into a critical backbone for high-performance computing. When you look at the volume spikes we've seen over the last few trading hours, it's clear that some of the big money is betting on the May 7th earnings call to be a watershed moment for their AI cloud division, rather than just a report on mining margins. The general belief around IREN stock is that it's a speculative play, a moon or bust ticker that belongs in a risky corner of a Robinhood app portfolio. People look at the 52-week volatility and assume it's just another miner trying to catch the AI wave to stay relevant. But if you challenge that assumption and look at the underlying grid connections, you find a company that has secured more power capacity than almost any other mid-cap data center operator in North America. The market narrative says IREN is chasing a trend. The reality is that IREN is building the physical real estate and power infrastructure that the largest tech companies in the world are desperate to lease. This is no longer just about self-investing in a crypto miner. It's about an industrial-scale land grab for the most valuable resource of the next decade, energized data center space. In the last few sessions, we've seen IREN stock show incredible resilience compared to its peers. While other miners have struggled with rising network difficulty and shifting hash rates, IREN has maintained its footing above the $50 psychological level. This level is crucial. It's where many institutional portfolios, perhaps those managed through Schwab Intelligent Portfolios or similar advanced wealth management tools, start to take a more serious look at the stock as it moves from a penny stock reputation into a mid-cap contender. The institutional activity has been particularly telling. We are seeing a steady increase in the number of funds holding the stock, often tucked away in Fidelity mutual funds or various tech-heavy ETFs that seek exposure to the physical side of the digital economy. The tension between what the market expects and what IREN is actually delivering is most visible in its capital expenditure. Critics argue that the heavy spending is a red flag for dilution, but the reality is that this capital is being funneled into the Childress and Sweetwater facilities in Texas, which are now coming online with Tier 3 specifications. If you're using an online investment platform or a Fidelity brokerage account to track these developments, you'll notice that the revenue mix is shifting. We aren't just talking about a few test GPUs anymore. We are talking about thousands of NVIDIA units already spinning and generating high-margin revenue through long-term contracts. This creates a predictable cash flow that traditionally didn't exist in the mining world, and that is exactly what keeps the bulls hooked. Comment below how many shares of IREN you currently hold and whether you think they can actually hit that $100 price target by the end of the year. The recent price movement is also being fueled by a short interest story that hasn't fully played out. Earlier this year, short interest was hovering in the high teens as skeptics bet against the company's ability to execute on its $3.7 billion AI cloud revenue target. But as the milestones for the Oklahoma campus and the Microsoft contract continue to be met, those shorts are finding themselves in a tight spot. This creates a feedback loop where any positive news catalyst, like the upcoming Q3 results, could trigger a rapid covering of positions, driving the price even higher. This is the kind of technical setup that attracts active traders on the Robinhood trading platform and interactive brokers alike, as they look for that explosive momentum. If we look at the broader context of online investing today, many people are searching for investment help to understand where the next leg of growth is coming from. They see the massive valuations of the Magnificent Seven and wonder if they've missed the boat. IREN offers an alternative angle. Instead of buying the software or the chip maker, investors are buying the power company. IREN's business model is essentially built on being a landlord for the most energy-hungry hardware on the planet. They own the land, they own the substation, and they own the cooling infrastructure. This vertical integration is their moat. While others have to wait years for a new grid connection, IREN already has the megawatts locked in. To understand where we are going, we have to look at where IREN started. The company, originally known as IREN Ltd, was a pure-play Bitcoin miner focused on 100% renewable energy. That focus on green power was a strategic masterstroke that is now paying off. Hyperscalers, the massive cloud providers like Microsoft and Google, have strict carbon-neutral goals. They can't just lease any data center. They need ones that won't blow up their ESG reporting. IREN's commitment to renewables makes them one of the few viable partners for these giants. This is why the Microsoft deal wasn't just a one-off, it was a proof of concept.
It showed that the mullet strategy, Bitcoin in the back for flexibility, AI in the front for margins, actually works at scale. Looking toward the future, the outlook for IREN is defined by execution risk versus massive upside potential. The expectation is that the company will continue to dilute shareholders to fund its massive expansion projects. However, the reality might be more nuanced. With $3.6 billion in GPU financing already secured, the need for equity raises may be lower than the bears anticipate. If they can hit their goal of $3.4 billion in annualized recurring revenue by the end of 2026, the current $16 billion market cap will look like a bargain. The main risk remains the hardware roadmap. They are heavily dependent on NVIDIA's shipping schedule. Any delay in Blackwell deliveries could stall their revenue growth and give the bears a window of opportunity. As we move into the next quarter, watch the margins on the AI cloud segment. That is the true north for this stock. If those margins expand as projected, IREN will no longer be compared to Marathon Digital or Riot Platforms. It will be compared to Equinix and Digital Realty. This transition is the reality that is slowly overtaking the outdated expectation of IREN as just a crypto play. For those using a SoFi active investing account or a Fidelity IRAs to build a long-term position, this shift in the business model is the most important factor to monitor. The volatility will remain high, as is typical for any stock with a 30-day implied volatility over 100%, but the structural trend is clearly pointing toward a more mature, infrastructure-focused entity. In summary, IREN Ltd is at a massive crossroads. We started with a live intraday price of $51.28, a figure that reflects a market starting to wake up to the company's new identity. We've seen how the expectation of IREN as a volatile Bitcoin proxy is being challenged by the reality of a massive, contracted AI infrastructure business. The transition is messy, and the revenue misses in previous quarters have scared off the weak hands, but the institutional accumulation and the scale of the power grid expansion tell a much more bullish story. The central insight here is that power is the ultimate currency of the AI age, and IREN has spent the last few years hoarding it. As they turn that power into high-margin compute, the gap between market expectation and industrial reality will likely close, and when it does, the current price levels may be a distant memory. This is a story of a company that didn't just join a trend, but built the foundation for it to exist. Maintain your focus on the May 7th earnings and the GPU deployment milestones, as those will be the true catalyst for the next major move. Keeping a close eye on your Fidelity mobile app or Robinhood Cash Management for these updates will be key for any active investor in this space. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.